And we're back with another episode of UniFiTV. It's been a while. I know, sorry, it's my fault. But we're back, and today we're going to be talking about renewable energy again. Let's do this.
Musk calls it the right time to complete the picture. Now, he's talking about the approximately $2.8 billion he's bidding to buy Solar City. So joining me now to break it all down is Dan Costa. He's the editor-in-chief over at PCMag.com. All right, so there's no doubt that Elon Musk is characterized by many as a visionary, all right? He's also considered this deal, he's said, to be quote-unquote blindingly obvious for a while. He said it for quite some time, but the timing is right now. So what is with the timing of this deal? We're also talking about Solar City shares, which are perhaps not nearly as high as they have been over the course of the past couple of years.
Yeah, I mean, he thinks that he's got the cash. They've got the great thing about Tesla right now is they've got the Model 3 coming out. They've got stupendous pre-orders, so they actually do have a fair amount of cash. They've got some nice orders on hand. But both these businesses are really are startups. Really, I mean, they're really in these industries that have not matured yet. They both require a lot of cash to operate. He thinks he can do this now and have this integrated unit by the end of the year. But I mean, that's really the open question: is will investors manage all of this risk with these two very young startup companies?
And they're both, like you said, very cash, at least intensive in terms of their overall picture.
Now, like the video kind of explained or showed, Tesla is hoping to buy out Solar City for around $3 billion is what I think it should be in the video. But this is a pretty big deal for renewable energies, and it's a big indicator on where oil is. Now, oil is, as of today, dropped beneath $40. It's like $39.58. Doesn't matter. Dropped below $40, showing that oil is not as strong as it was 2 or 3 years ago. Now, this is significant because it pretty much drives out American producers. And so all of our oil, or not all, because obviously that's a bit hyperbolic, but a lot of our oil is now exports. Or I'm sorry. Yeah. So we import them, but they're exports from other countries. So a lot of our oil we are importing from countries like Nigeria, Saudi Arabia, Russia. And now after the embargo has been lifted, Iran has begun its production and selling to the United States and other Western countries. So that's where the huge drop in price really comes from. Is this a lot of countries joining into the markets, as well as the oil producing countries they're trying to outproduce each other because the price is so low. In order to stay competitive, they need to produce a lot, which helps keep the price down. I could see an increase in the cost of oil come winter, only because we need that oil for heating. So let's get back to our main topic, which was renewable energy, specifically Solar City and Tesla. Now, Tesla has a new factory called a Gigafactory, and I believe in some Nevada desert, where after it's completed in 2020, it's supposed to be the largest building in the world, supposedly. But that's the plan, and if that's the case, Tesla says it should be able to produce their electric cars, their full electric cars, much cheaper. Now, this is incredibly significant for renewable energies because Solar City would have the ability to utilize the production capabilities of that giant factory, which is crazy, for economies of scale to minimize costs. Now, Tesla also produces batteries, these very state-of-the-art batteries that pretty much allow, the idea was to allow people in, I guess, poor areas of the world to live off the grid but still have sources of electricity. Now, this coincides perfectly with the solar panels that Tesla is hoping to incorporate into their business model. So you'll have solar panels gathering energy to store into a battery, to the Tesla battery, which will then store the energy for long periods of time, which then could be used by the Tesla car to be powered. Now, I don't know exactly how big the battery is, and that's important to know because if you have small batteries, you could take the battery like with you on the move. And so if you're going on a long trip, you could just take the battery, keep it in your trunk, have it full, and then just like plug it in like every like 200 miles or however long I think it's 269 miles is the range of a Tesla Model S from like full to finished. So that's pretty impressive. So the incorporation of those three things could be the beginning of overcoming the largest hurdles that renewable energy car companies, or I guess electric cars specifically, have had, which is lack of distance. So you can't really travel long distances because you need that plug constantly. And so the battery gives you that plug and outlook. And so this, because oil is so cheap, I would say renewable energy is not being invested very heavily in because there's no reason to. Now, most renewable energy being invested into is for the sake of battling climate change and other man-made disasters because of increased CO2 levels in the atmosphere. But from an economic perspective, oil and gas is just so cheap that there's really no need to invest into renewable energies. So as we go along in the next 10, 15 years, are going to be crucial because we're most likely going to see a huge ramp up of renewable energies as both the technology increases to where solar panels itself are just incredibly more efficient. And we talked about this a little bit earlier, where solar energy is like 13 kilowatts per hour or something, and coal and gas can be like 10 cents per kilowatt hour. That's it. Yeah, not 13%. It's 13 cents per kilowatt hour. Yep. I get my numbers mixed up there. But yeah, so already you don't have like this huge margin between per kilowatt hour of renewables and oil and gas. But what we do have now is we're going to be seeing an increase in investments in renewable energies. And we know this for a fact because the trend has already started. Between 2004 and now, the amount that has been invested into renewable energies has been growing exponentially. And we need this for a few reasons. First, if the United States is the first to become the first like big country to be energy independent, like solely based on renewables, the amount of infrastructure and investment needed, and all the jobs that are created from that is a great sign and great potential for the United States economy. In addition, if we're first, we can export our technology and things throughout the world, which is another good strength to the economy. Now, we talked about all this stuff in the previous video, so I'm going to try and not repeat myself, and I'm emphasizing the importance of renewable energies. But I think I'm going to leave one of my last notes on this, which is the SolarCity Tesla buyout. And during usually these mergers and acquisitions, the company getting taken over, their stock tends to rise while the company buying the program, so Tesla in this case, will tend to fall. Mind you, there's just an offer on the table right now, and I think it's specific. And important to know that it's just an offer. But if this were to go through and become finalized, and SolarCity becomes a part of Tesla and under Elon Musk's umbrella, we will see a huge change in the way we look at renewable energies, where instead it's not like it'd be nice if this was the case, if we could do it, and transition into a conversation where it's like, okay, like we can actually do this now. Is this the right thing to do for our economy? Is this the way we want to go for the economy? So I'd love to hear your guys' thoughts. I'm going to finish it up here. As always, this has been UniFiTV. See you guys next time.